goodwill and premium for goodwill is paid privately by new partner to existing partner, means there is no involvement of the firm. That's why no entry will be passed for these type of cases.
So can you repeat?
Okay. So when goodwill or premium for goodwill is paid privately by new partner to the existing partner, then in that case, there is no transaction involving the firm. Yes?
Yes. Yes.
That's why no entry is recorded in firm's book.
Okay, sir.
Okay. So the second case, when goodwill premium for goodwill brought by new partner in cash or kind. So this is cash account debit, assets account debit. I think I have cleared this also, but not solved a question related to this.
I think I don't remember we did this.
Okay. Okay. So let me clear this. Okay. When goodwill premium for goodwill brought by new partner in cash or kind. So first of all, you can see I will explain these journal entries. So first of all, what is the journal entry for investing capital into the business?
Capital into business. Capital account debit to investment account.
No, it's not correct. Okay, it is cash account debit to capital account. This is part of the journal entry in 11th.
Okay, sir.
Okay. So whenever a partner or a proprietor invests money into the business, he give cash in the business. So cash is coming into business. That's why cash is debited, and the money is given by partner. And we cannot write the name of owner or partner into the business. That's why we write capital.
Okay, sir.
So cash account debit to capital. Now, if he bring premium for goodwill, so entry will be cash account debit to premium for goodwill.
Yes, sir.
Because premium for goodwill is a capital nature profit for the partners. That's why this is on the credit side. Profit is always written on the credit side. Okay.
Okay, sir.
So cash account debit to premium for goodwill. Now you have to combine these two entries, because when a partner will be admitted, he will bring capital and premium for goodwill also. Okay.
Okay, sir.
So the combined entry will be cash account debit to partners capital account, new partners capital account, and to premium for goodwill. Okay.
Okay, sir.
Okay. One more thing. The new partner can bring cash or some other assets in his place.
Like machine or etc.
Yes. So he can bring cash, machine, stock, debtors, anything.
Okay, sir.
Furniture or stock. So anything he can bring. So whatever he will bring into the form, we will write it on the debit side. If he's bringing cash, then cash is debited. If he's bringing machine, then the entry will be machine account debit to machine account debit, cash account debit to partners capital to premium for goodwill.
Okay, sir.
Okay. And if he is bringing only machine, not cash, then machine account debit to partners capital to premium.
Okay, sir.
So this is our first entry. You can see here cash account debit, assets account debit to capital account to premium for goodwill account. Is this clear?
Yes.
Okay. Now, after bringing the premium for goodwill, actually the cash which he will brought will be included in cash. The asset is also included in assets. The capital will be written in the name of that partner, but the premium for goodwill is distributed between old partners. So we have to pass the journal entry for premium for goodwill distribution. So for distribution of goodwill between partners in sacrificing ratio. Premium for goodwill account debit to sacrificing partners capital. Now, what is sacrificing means here? So I told you that when a new partner will come, okay, then both of the old partner can give his share combined, okay, they will contribute together, okay.
Okay, sir.
Or there can be a case where only one partner like A or B will contribute. Yes.
Yes, sir.
So both of these situations can be given in the portion where A and B together giving the profit share to C from their own share, and where only one of them is giving his share, he is contributing his share for C.
Okay, sir.
So if they both are giving the profit share to C, then they both will get share in goodwill. And if only one is giving his share to C, then only one of them will get share in goodwill.
Okay, sir.
Okay, that's why it is called that they will distribute the premium for goodwill in sacrificing ratio. Means if C is bringing 5,000 for premium for goodwill,
Okay, sir.
okay, and only A is sacrificing, means only A is giving his share to C, not B, then this 5,000 will be paid to A.
Okay, sir.
C will not get anything. Okay.
Okay, sir.
Okay. So A is sacrificing partner. That's why he is getting. B is not giving anything to C. That's why he is not getting anything from C. So goodwill is a compensation for sacrificing their profit share.
Okay, sir.
So this is the journal entry number 2. Now, there can be a situation given that partners want to keep their goodwill, keep this goodwill share into the business, and partner want to withdraw this. So there can be two options. Can you tell me the name of these two options?
Second, repeat.
Yes, that's why. You didn't listen this?
No, sir. Actually, the voice is lagging here.
My voice is lagging.
Yes, I think my net is poor.
Okay. Okay. So a premium for goodwill account debit to sacrificing partners capital. Okay. So this is our distribution. Now, sometimes partner can decide that they want to keep their goodwill share into the business, or they want to withdraw it and take it home.
Yes.
So there can be two options. For these two options, in first option, where they want to keep the goodwill into the business, there will be no entry.
Okay.
And if they want to withdraw it, then the journal entry will be sacrificing partners capital account debit to cash or bank account.
Okay, sir. So in sacrificing partner capital, there can be one partner, two partner also.
Yes, because how many partners want to withdraw the money, it will be given in the portion. So according to the information, you will write the name of partners.
Okay, sir.
If it is written that all the partners want to uh, withdraw half of the goodwill share, then half of goodwill share will be withdrawn. All the sacrificing partners' name will be written here.
And it will be distributed among them according to the ratio.
No, distribution is done here. You can see. Let me
Okay,
give you
sir.
an example for this. There will be a question for this. Okay. So this is your question here. You can see the question number 26.
Yes.
Okay. The question is X and Y are partners sharing profit and profit in the ratio of 3:1. Z is admitted as a partner for which he pays rupees 30,000 for goodwill in cash. X, Y, and Z decided to share the future profit in equal proportion. You are required to pass a single journal entry to give effect to the above arrangement. So what will be the transaction here? Okay. Let's
Okay.
say in this situation, first of all, we have to calculate the sacrificing ratio because we need sacrificing ratio for distribution of goodwill.
Yes.
So, first of all, sacrificing. Their old profit sharing ratio is 3:1, and their new profit sharing ratio is so 3/4, 1/4 was their old share, and now they want to distribute the profit in equal proportion. So the new profit sharing ratio is 1/3, and here 1/3. Okay.
Okay, sir.
Now 12, 9,
Sir, how 3 came?
which 3?
1/3.
1/3. X, Y, and Z decided to
Okay.
share the profit in equal proportion. So the new ratio will be 1:1:1.
Okay, sir. I didn't notice the Z.
Okay. So 5/12, 1/4 minus 1/3, it will be 3 minus 4. So minus 1/12. Okay.
Okay, sir.
So in this case, which one is sacrificing partner? X. And Y is gaining partner because his sacrifice is in negative. So he is gaining partner. Now, the journal entry for goodwill will be sacrificing partner's capital account is credited and gaining partners is debited. Yes.
Yes.
Okay. Now, premium for goodwill account, because he is bringing 30,000 for his goodwill. He is bringing
30,000.
30,000 for his goodwill. So Z share is 30,000. Okay.
Okay, sir.
Can you tell me what will be the Y share? Actually, these type of cases is very rare where one of the existing partner is also gaining partner. Okay, because Y is also gaining, so he has to pay some share in goodwill also to X. So first of all, we need total goodwill for this. Z share is 30,000 for 1/3 share. So we will multiply it with 3/1, reciprocal of his share. So total goodwill is 90,000. Now this 90,000 into 1/12. So 7,500. Okay.
Okay, sir.
And X share will be 90,000 into 5/12. 5/12. This is 5/12 and this is 1/12, which we have used here. So it will be 37,500. So X is getting 37,500. So entry will be X capital on the credit side. and Y capital and Z capital 30,000 and 7,500. Here it will be 37,500.
Okay, sir.
Okay. So now, if quotient tells you that that if X want to withdraw the half money from the firm, from his share of goodwill, then what will be the journal entry? The last one. This for withdrawal of amount of goodwill. So distribution is already done. Yes.
Yes, sir.
Now he wants to withdraw the money. So entry will be X capital. X is withdrawing the money. So X capital account debit to cash. And if there is two partners withdrawing the money, then X capital account debit and that partner name, the second partner, Y or Z, whatever it is, Y capital account debit to cash. Okay, whatever amount they want to withdraw, it will be written here. Like in 37,500, he wants to leave 7,500. It means total money he wants to withdraw is 30,000. Okay.
Okay, sir.
It is my assumption. Actually, I am taking this assumption that he wants to keep 7,500 into the business. So the balance he will drop. So 30,000 he will drop.
Okay, sir.
Is this clear?
Yes, sir.
So if there is no information about withdrawal, then this third entry is not required. This is written in note also. If goodwill is retained in business, means we have retained goodwill into the business and not withdrawn it, then the third entry will not be passed.
Okay, sir.
So this is our second case. Now the third case. Okay. Can you read the heading?
When goodwill premium for goodwill not brought by new partner.
Okay. What does it mean?
The new partner is not bringing goodwill or the premium for goodwill.
So he is required to bring two things, capital and goodwill. Yes.
Yes.
So it is his duty to bring goodwill, but he is not bringing it. Yes.
Yes.
Now let's understand this. Let's say capital he will brought or goodwill he will brought. Two things that a new partner will bring. Yes.
Yes.
Okay. So C is bringing capital, C is bringing goodwill. Now capital will be always the property of C. Yes or no?
Yes.
If he want to leave the firm, then he will take this capital and go.
Yes.
But goodwill is not his asset. Yes.
Yes.
Goodwill will be distributed to existing partner. Okay.
Okay, sir.
And capital will be always in his name. So tell me where he can, you can say, use the money first, for goodwill or for capital.
So whose money? C's money.
Yes, if C is bringing some cash, let's say if it is saying that C is bringing 50,000, so it should be utilized first for capital or goodwill.
For goodwill.
Why goodwill?
Because it's existing partners.
Yes, it is not a property of new partner, so he should bring goodwill first. Yes.
Yes.
He cannot say that I will not bring goodwill, I will only bring capital. Okay, then he will not be admitted into the business. So he is required to bring goodwill into the firm. Yes.
Yes.
Now, if he is saying that I am only bringing 50,000 capital, then what will we do?
So can you repeat?
If he is bringing only 50,000 capital and not goodwill, then what will the existing partner do?
We will take the 50,000 as goodwill.
Okay, actually, if goodwill is 10,000 only, then
And rest will take from the capital.
okay, then this 10,000 will be deducted from capital. Okay,
Yes.
and the balance 40,000 will be his capital. Okay.
Okay, sir.
So this is what is written here. You can see this for capital brought by new partner. Okay, cash account debit to new partner capital account, because he is not bringing goodwill. So there is no entry for goodwill in first. Yes.
Yes, sir. So from his capital account, we are taking and putting it in the goodwill account.
Yes. The next entry is for transferring the balance from capital account to goodwill account. So new partner's capital account debit to sacrificing partner's capital account. So sacrificing partner share of goodwill is taken from his capital.
Okay, sir.
So this is okay. Good. Am I audible to you?
Yes, sir.
Okay. So is this clear to you?
Yes, it's clear.
So for distribution of goodwill between partners in sacrificing ratio, new partners capital account debit to sacrificing partners capital account. In some of the case, a new partner will bring some part of goodwill. Okay, am I audible to you?
Yes, sir.
Okay. There was some network issue actually. That's why I disconnected. Okay, so I'm saying that there may be a case given in the question where some part of the goodwill is brought by the partner. Okay, not full. Some part of it is brought by new partner and some part is not. So let's say in one of the case, the share of goodwill of new partner is 30,000 and he brought only 20,000. Okay.
Okay, sir.
So in this case, what will be done?
I think 10,000 will be taken from the new partner's capital. Share of
Very good.
goodwill it is.
So
Yes.
premium for goodwill of 20,000 will be used and capital of new partner for 10,000 will be debited. So total 30,000 will be credited to sacrificing partner's capital. Okay.
Yes.
You can see the entry here.
Yes.
For premium for goodwill and capital brought by new partner, because he's bringing some part of goodwill. That's why premium for goodwill is written on the credit side. And now for distribution of goodwill, you can see new partner's capital account and premium for goodwill account is debited because he's bringing some part of goodwill. That's why paid part and not paid part. Okay.
Okay, sir.
So this is our goodwill concept. All the cases. Is this clear?
Yes, sir.
Okay. There is two more topic that is given, but these are not cases actually. Okay. These are separate concept related to goodwill.
Okay, sir.
Okay. Now existing goodwill. Sometime there is two types of goodwill given in the question. One is existing goodwill. The second is valued goodwill.
Okay, sir.
Okay. Like the line that will explain the goodwill will be written like this. There is a existing goodwill of this amount, or there is a goodwill shown in the books, or there is a goodwill appearing in the books. So this is called existing goodwill. So what we have to do, we will just write it off. There is no other treatment of this type of goodwill. We will just write it off.
The existing goodwill.
Yes, the existing goodwill will be written off from our books. So entry is old partners capital account debit to goodwill.
Okay, sir.
So it is written here. If there is any existing goodwill appearing in the books, then it will be written off in the old ratio, old profit sharing ratio of existing partner. You have to remember this, that the existing goodwill will be written off in the old ratio, and the valued goodwill that we have discussed just right now, 4 cases, is always distributed in sacrificing ratio.
Okay, sir.
Okay. Can you repeat the line?
The generality.
No, the treatment of existing goodwill or valued goodwill.
Valued goodwill is distributed among the partners according to the sacrificing ratio.
Yes.
And the existing goodwill is distributed among the partners according to the old ratio.
Among the existing partners.
Yeah, among the existing partner according to the old ratio.
Yes, very good. So these are our cases. Now the question part. Actually, you can see here premium brought in kind. I also told you about that a partner can bring his goodwill in cash or in kind or both.
Yes.
Okay, so this is the case where he is bringing a stock, debtors, land, plant, machinery, everything. Okay, so we will write all these items on the debit side and capital or goodwill on the credit side.
Okay, sir.
Okay, now when premium is brought by new partner and is withdrawn by old partners fully or partly. Okay, means goodwill is brought by new partner, but it is withdrawn by the existing partner. I told you about this also.
Yes, sir.
Okay, so we have done the question up to this topic. Okay, now when only part of premium is brought in by the new partner in cash. Now the question number 31. Please read the question number 31.
A and B are partners sharing profits in the ratio of 2:1. They admit C for 1/4 share in profits. C brings in rupees 30,000 for his capital and rupees 8,000 out of his share of rupees 10,000 for goodwill. Before admission, goodwill appeared in books at rupees 18,000. Give general entries to give effect to the above arrangement.
Yes. Now you can see, first of all, the important information is 2:1. Okay, and they admit C for 1/4 share. So this is enough for calculation of new profit sharing ratio and sacrifice gain.
So I can repeat.
These two information that is given about ratio is enough for calculating new profit sharing ratio and sacrifice.
Yes.
Okay. Now C brings 30,000 for his capital and 8,000 out of his share of 10,000. So his share is 10,000, but he is bringing only 8,000.
So
Yes.
2,000 will be minus from 30,000.
Yes. Now, before admission, goodwill appeared in the books.
So it will be written off.
It is existing goodwill, so it should be written off.
Yes.
Okay. So let's solve this question. Okay. Now, what will be the first working note? It will be our new sacrifice or gain.
Yes.
So total profit share we will assume as 1. You will write assume total profit share of firm is 1. Now balance for A and B. Balance for A and B. It will be 1 minus 1 by 4 because C share is 1/4. So 4 minus 1, it will be 3 by 4. Okay.
Okay, sir.
And now A, B, and C. C is getting 1/4. A is getting 3 by 4 into his share was 2 by 3. B is getting 3 by 4 into his share was 1 by 3. Yes. So total 2 by 4 for A because 3 and 3 will be removed. 3 and 3 will be removed. And the 1 by 4 for B and 1 by 4 for C. So the new ratio will be 2:1:4. Okay.
So, sir, the share of C is minused with 1. So that we'll get the new, I think.
We have discussed this concept in calculation of new profit sharing ratio.
Yes.
Which case is this?
Share is also given, and this is the case 1.
Case 1, where old profit sharing ratio and new partner share is given. Only these two information is given.
Yes.
So we have to follow these steps. First, we assume total profit share 1, then we deduct the new partner share and we get the balance. Balance is multiplied with the old partner's old share, and then we get new share. And in this case, sacrifice also equals to old ratios, 2:1. Is this clear?
Yes, sir.
Okay. Now we know the sacrificing ratio, so we can distribute our goodwill. Working note number 2. Goodwill, his share was 10,000. Yes.
Yes, sir.
So we will distribute 10,000. So A compensation and B compensation, A will get or B will get. So 10,000 into 2 by 3, because this is the sacrificing also, 10,000 into 1 by 3. So A will get 6,667 and B will get 3,333. Okay.
Okay, sir.
And now we have to write existing goodwill also. It is 30,000
Yes.
Sorry, it is 18,000 here.
Yes, 18,000. 2,000 at a
So
minus.
18,000 will be written off in old ratio, that is 2:1, means 2/3 and 1/3. 6,000 and 12,000. Okay.
Yes.
Okay. Now the journal entry. So first of all, the cash brought by new partner, cash account debit to uh, to C capital and to premium for goodwill. To premium for goodwill. So premium for goodwill is 8,000 he is bringing in and 30,000 for his capital. So total 38,000 he is bringing. Yes.
Yes.
Okay. Now, his share for premium for goodwill is 10,000. Yes.
Yes, sir.
But he's brought only 8,000.
So I think we'll minus.
But A and B will not agree that we will not take 8,000. Your share is 10,000, so you have to bring total amount. So 6,667 and 3,333. Total is 10,000. So balance 2,000 will be taken from C capital account.
Yes, sir.
So this is distribution. Okay, and the third entry is for write-off. So entry will be A capital, debit, B capital, account debit, and two, goodwill account. 18,000, 6,000. Done.
Yes, sir.
So this is our all the cases. Now, in one of the question, let's say that he's not bringing any part of the goodwill. Then what will happen? Then we will remove this premium for goodwill here because he's
It's not
not
bringing
bringing
goodwill.
goodwill.
Okay.
Yes. So we will write only cash account debit to capital account 30,000, 30,000. And in the second entry also, premium for goodwill will be not written because total money will be deducted from his capital. Yes.
Yes, sir.
So we will write 10,000 here. And this is correct. Okay.
Okay, sir.
So this is the difference between case number 3 and case number 4. Means when total goodwill of full goodwill is not out. Okay. So some part of is brought and some part is not. Okay. This is one case. And when there is no goodwill brought by new part.
Okay, sir.
So these are the 4 cases of goodwill. Now, these are the questions that you have to solve. Question number 30, 32, 33, these 28, 29. Okay, need more practice for this because your term and examination is nearby. There's one more concept. I told you there is 2 concepts which is separate from these cases. One is existing goodwill that I have already taught you, and the second is hidden goodwill.
Okay, sir.
Now, you understand the name hidden goodwill. It is not shown in the question, but it exists.
Yes.
Okay, so you can see the information that written here. Sometimes there is no information of goodwill in question, so nothing is written about goodwill, but it exists. Question will ask you to treat the goodwill.
Okay, sir.
It is like I'm not giving you some fruit and I'm telling you to distribute it.
Yes.
So how will you do it?
We'll take it from the capital.
Yes, but if I'm not saying about goodwill and I'm telling you to distribute it, means it is hidden somewhere. That's why it is called hidden.
Okay, sir.
Okay, the next is how we will treat this. So hidden goodwill, first we will find out that how much amount is goodwill. Okay, and then we will deduct it from the capital. First, the first step will be calculation of goodwill. So you can see steps for calculation is written. Calculate total capital of firm on the basis of new partner's capital. Let's say if new partner is bringing 2 lakh. How much?
2 lakh.
2 lakh for 1/5 share. 1/5 share. So in total share is 5 and he's getting 1 out of 5. Yes.
Yes.
And for that he's giving 2 lakh. So total capital of firm should be not clear.
No, sir.
Okay. Okay. Is that actually I have to match things with this example. Do you have anything right now in, let's say, this is my pen that I'm using. Okay. I have total 5 pen. Okay.
Okay, sir.
And I am giving 1 pen from these 5 to you. And I'm taking 2 lakh from you.
Okay.
So total value of all the pen.
2 lakh into 5. 10 lakh.
10 lakh. Yes. So from 5 share, you are getting 1. And for this 1 share, you are paying 2 lakh. It means total share is 5. 1 is given to you. So balance 4 is with all other partners.
Yes.
Okay. And I'm giving 2 lakh. So they should give 8 lakh. So total it will be 5 by 1. You just have to reciprocal it. Means whatever your share, you will just reverse it. So 2 lakh into 5 by 1.
Okay, sir.
Total 10 lakh. Is this clear?
Yes, sir.
Okay. After this is 10 lakh means it should be the total capital of firm. Now, let's say A and B, 2 partners is given in the question and their capital is, let's say 4 lakh and 3 lakh. Okay.
Okay, sir.
So total capital of A and B is total capital of A and B is
4 lakh and 3 lakh.
combined.
It's say 7 lakh.
7 lakh. And capital of C is added to this. So capital of A, B, and C combined is 9 lakh. Yes.
Yes.
But it should be 10 lakh.
Yes.
So the balance 1